Everybody, you already heard about the test bar and how it can ignite a V-shaped rally. Well, now it's time to put things into practice. Now, this is a trade from Charlie. He lives in the US, but he could live in any part of the world and trade this at any time of the day, because these are global futures and they're basically traded 24 hours a day. Now, this is a Nasdaq and the micro E-mini future. What we see here is the 5-second chart, and this is the pattern, the S1 pattern. But what we want to focus on today is the test bar. This is the test bar. This is an excitable price action event. In this case, it's a single bar event with the wick on the top. That's the ideal shape of a test bar. Now let's have a look. Well, you can read through the commentary of Charlie, but let's just go through the trade here. This is the 5-second chart. This is a 15-second. This is the 1 minute. That's a 5-minute chart. So that's a 4-chart layout. Now Charlie usually does not trade the 5-second chart because it moves very quickly, right? But in this case, he made an exception because this is a no regret trade. This is a very high quality multi-bar S1 pattern. The power comes out of this multi-bar consolidation, out of the trend 2 time frames higher, out of the support the trade gets from the 21 moving average, the blue line, and obviously the test bar. So the test bar is really needed to get things moving. This is a double trap. It basically traps out bears, like short traders that have been in the trade and they put their stop too tight, so they get stopped out, and it tricks in counter trend traders who want to trade that long. Now let's have a look. This is the entry. This is the stop. Stop is nicely protected behind the 21 moving average as stop protection, and we're in a nicely trending environment. So what is the special thing about this one? An extra bonus? Well, we've got a stop run level on the 5-minute chart. Price gets drawn to stop run levels. That's a magnet level. So drawn to and then pushed through. When it pushes through, well, it creates what we call a stop run move, an acceleration, an exponential move to the downside. Well, let's see how that developed. So this is the trade and the entry. So we see that we didn't get an immediate follow through. Well, that's not unusual, right? When the area gets tested, the stop was very well protected. This price action higher, well, tested the stop level, but it was not it was not threatened. So then it continues, and this is the first stop run move, breaking to a new low, breaking the low of the consolidation, and then it just continues in overall trend direction down, and we see these pullbacks to the 21 is our main indicator, and then there's the stop out here. So Charlie took partial profits along the way. If he had followed the standard exit algorithm, well, this would have been basically a 3.9 hour result in less than 10 minutes. It's that short a time you can make quite a nice profit. Now let's look back. This is the test bar, an excitable price action event, and following that, well, we get more big bars, right? Well, this was a test bar against trend direction. This is why we call it a test bar. And now we have got trend bars in trend direction. This is the stop run move, taking out these lows, and then we've got another bigger move. That's probably when the when this stop run level on a higher time frame was taken out, and then this develops into an exhaustion to the downside. Let's have a look at it. That's an exhaustion to the downside, well overextended. Well, then we want to get out of the chart, right, out of the trade, and that's what Charlie did here. He brought home a nice big profit in less than 10 minutes. Well, that's fantastic. Big congrats.